Hey guys, Zack here, and welcome to the Saffron Academy Podcast. The objective of this podcast is to be an additional educational resource for our viewers. Saffron Finance does not endorse the viewpoints shared in these conversations, nor should this be construed as any kind of financial advice. But we are interested in giving exposure to a wide range of brilliant investors, developers, entrepreneurs, traders, and so much more. If you have an idea for a topic or particular guest, feel free to write into the show at dingo@saffron.finance. I hope you guys enjoy this, and we are looking forward to seeing what kind of value this provides. Today's guest is Hamzah Khan, the head of DeFi over at Polygon. In this episode, we talk about how Hamzah got his start in crypto, how he joined Polygon, his outlook for DeFi going forward, and a lot more. We had a great time recording this episode, and I hope you all enjoy it. Hey guys, so as you know, I'm here with Polygon's head of DeFi, Hamzah Khan. Hamzah, how you doing today? Thanks for joining us on the show.
Hey Zach, thanks for having me. Doing good. Doing good. What about you?
I'm great, man. And listen, we're going to dive right into it. I'll start off with the same question we basically ask everybody, which is, how did you first start off in crypto? How did you hear about it? And tell us a little bit about your first experiences in the space.
Yeah, for sure. So I first heard about Bitcoin back in 2017 when I was in college. I am a mechanical engineer by profession, so I went to engineering school. I was in my final year. I was taking computer classes, and there somewhere I don't remember how, to be honest, but some maybe I was in Dubai that time where I first heard about Bitcoin via some random article, and that's it. I think since then, that's when I first heard. And like the how everyone starts, you buy some Bitcoin. I think that at that time there were a lot of ICOs coming up, so you just get attracted to what's happening there. Although like not many worked out well, but I think Bitcoin. That was the first time I heard about Bitcoin, then Ethereum, and even MATIC was there big during that. It was not big, but yeah, it was the only Indian project, so it was big for us. So yeah, that was the first time I read the Bitcoin white paper. Didn't understand. Read it multiple times. Uh, yeah, I think that's pretty much for with everyone. That's how you get into crypto. But then I think I left during the crash. I mean, like it was a stupid move. I would now, looking back, I missed. I just left crypto. I stopped paying attention during 2019, 20. I came back, but yeah, 2018, 19, I just left. Like I just didn't look into it. I was working with different jobs. I was working at startups. I made my own startup. So yeah, that time I left everything. I was not looking anything into Maker, Uniswap, all of these things that were happening. So yeah, then I came back in 2020.
That's great. And yeah, I'm right there with you, man. If any of our listeners remember, actually, I have kind of a similar story where that crash kind of pushed me away for a period of time. And I think people like you and I have that, I wouldn't say regret, but kind of that lesson we've learned, and we've seen that opportunity we could have taken kind of pass us by. But now we know that that's a part of the crypto space. And, I see a lot of people kind of undergoing a similar experience now with this current market. And, hopefully not too many people are getting burned and leaving crypto, but, volatility is simply part of the game in this sector. And I hope that people can see that and that they understand it's not so much price, but more the underlying technology of these protocols that give the projects and the space at large their staying power. And, that actually kind of goes into the next question I have, which is, when you started getting into crypto, were you sold on the technology? Like, did you know, hey, this blockchain technology has the potential to change the financial system, or were you looking at it a little bit more like an investor, like, oh, hey, there's money to be made here?
I mean, I don't know, like 18, 19, 17, something like that, 17, 18 back then. So not completely sold on the technology, but having said that, it there was one thing that struck me back then was that most of these technologies, these new things that come up, like genuine good things that come up, are usually built on some previous research. Like if you look at, I mean, even look at Bitcoin, right? So Bitcoin, in essence, if you look at Bitcoin, the white paper, they had many references to previous stuff that had been done. So there was not much, although they did create this Nakamoto consensus and these things. Some of they combined a lot of research into one product. But if you look at it that way, that there was not much breakthrough in they didn't create anything from scratch. I mean certain things, of course, but they took in a lot of what should I call it, like uh, took in a lot of research from other people who had done in cryptography, in economics, and it was not the first digital currency. There were other things that had been done. So once I read that research paper, I looked into other those references that is there on the last page. I looked into that, and it made sense that okay, the double spend problem, that's what they solved, like the double spend problem, which was not really solved before that. But the underlying cryptography, the cryptography, and some consensus mechanisms, they were already designed theoretically. I mean, theoretically they were designed. Then I started looking into those boards that Satoshi was explaining via double elliptic cryptography, these certain things, that why Bitcoin does it and why no one else has done that. When I was reading all of that, like it somehow slowly, steadily, during that 6 months of that bull cycle, from July, I bought in July 2017 until November, I think. I didn't sell the top, but yeah, near to the top was, I think I sold it. And then I think then after that I started reading more about double spend and these things, and it's sort of uh, I stuck for the tech. I stuck for the tech, definitely. But yeah, like I think it was very intriguing, for to say the least, especially the white paper, the Bitcoin white paper. So yeah, I hope that makes sense.
Oh yeah, no, definitely. It's like a good mix there, which I think is the case for a lot of people. And then so going forward from there, just curious about how you came to Polygon, because I think that it's such a it's a specific problem that you guys are tackling over there at Polygon in the space, and just wondering how you went from kind of dabbling in cryptocurrency and Bitcoin, etc., to finding yourself as the head of DeFi over at Polygon. So what was that kind of journey like?
Yep. So I had, like I said, I had heard about Matic before, like before it was Polygon. I heard about Matic back in 2017 because it was the only Indian company that was working in the blockchain. So naturally, I was in college in India, and that's when I first heard. But yeah, like I said, I didn't really catch up on the bear market. But then in 2020, when I first started looking back into Ethereum and certain things, I started, like like anyone, like on Uniswap. I moved first, did some stuff on Uniswap. Back then, I remember the ETH price was around 300, 250, 300,
Yeah.
um, around September, I believe. And that was fine. Like the gas prices were low. This DeFi summer had just ended, so I didn't really know, what had happened before. But going into December, gas prices were shooting up. ETH mainly was shooting up. So consequently, gas prices were high. And for like I didn't have like a lot of capital. I come from a very low middle class background. Like I started looking into, like, okay, like I looked into the fees.wtf page, and I was like, what the fuck? Seriously, WTF? What the hell is this? I spent this much just trading like 50%, I don't know, 30% of my portfolio is like just on gas. What the hell? Because I was trading like $100 worth back then and $200 worth. I didn't know what the problem was. And then when gas prices were hitting high, and I was like, holy shit, this is bad. This is bad. And luckily during that, I was part of this hackathon. I was part of this hackathon that we were working on. Me and my friends were working on, and MATIC is supposed to be the sponsor for that. And MATIC sponsors a lot of Polygon now. We sponsor pretty much all of the hackathons. So that's when I got to know about MATIC. I spoke to some of the folks, and happened to be that they were hiring aggressively because it was just about to rebrand, and a lot of things were happening. I didn't even know that about the rebranding. So I joined Matic around that. I had some DeFi knowledge, so about Uniswap, synthetics. Yeah, I think these two I knew back then. And then during that, I think when I joined Polygon, Matic, even then, and then the journey started about what Polygon is, and I started reading more about actually blockchain. I didn't really get into the deep of blockchain, like what are the consensus, how blocks are produced, like the Polygon architecture. I When I got in, I started reading more, so that kind of made sense, why we need a low gas solution for DeFi to be truly scalable to, the next million users. The next million users won't come on Ethereum L1, that is for sure. Like there will be scaling solutions, layer twos like Arbitrum, Optimism, and of course Polygon. So we are also scaling up a lot of ZK side of things, and then SDK with the Polygon SDK. So these things will allow teams and projects to build their own chain, to build on layer twos, to build on POS network, which currently is live. So yeah, that made a lot of sense for retail. I mean, it has to be scalable. Any business that you do has to be scalable, and I think that's what stuck. Uh,
Awesome. Yeah. I mean, I think that the scalability is an issue that not necessarily everyone is aware of, but as we saw, with this last kind of bull run with Ethereum going up to 4,000, whatever it was kind of a wake up call to a lot of investors who, yes, at the time were probably doing well if they bought and held, but as they started making other transactions, or maybe they were buying more, or maybe they were staking, other ERC20 tokens, they were getting hit with gas fees that were, I don't know, $230, probably upwards of there.
yes,
And I think
upwards,
a lot,
upwards,
yeah,
upwards.
yeah, upwards, right? Yeah, it was really crazy, and so unless you're trading, or really exchanging large sums, it wasn't worth it. And I think that was kind of a huge wake up call to a large portion of retail, at least certainly the new influx of people that we had. That, hey, there's a pretty big issue here. So I think it's great that you guys are working on that, obviously, because we don't want to pay gas fees that are in those higher triple digits. But yeah, I would love to hear just a little bit more, if you want to get a little bit more detailed, just about the technologies that you guys have offered in the past or plan to offer that improve blockchain performance.
Sure. So there are a couple of things here. Like, for okay, for DeFi, like block. Coming to the blockchain side of things, like, so we currently do like a lot of transactions, a lot of wallet users, and these things are like we are doing like 7x the transactions, because there's very less gas on Polygon as a scaling solution. But in terms of blockchain, so you do want me to get into the architecture, or like what? Sorry, I didn't completely understand.
Yeah, just if you want to explain to our listeners the way that you guys are able to improve upon that blockchain performance and basically
Okay,
tackle the main issue of scalability,
got
and
it, got it.
get as detailed or nitty gritty as you want, or you can keep it at a little bit more of a layman's perspective, totally up to you. I just want to make sure our listeners kind of have that grasp and understanding of what you guys are doing over at Polygon to attack that problem.
Sure. Makes sense. So Polygon, so the currently Polygon has like this. There are multiple solutions. One is the plasma chain. One is the POS chain. I'll stick to the POS chain because it has most economic activity. So there are about 5 billion, if I'm not wrong, 5 billion worth of transaction. Sorry, per TVL on the POS chain, and this POS chain architecture comprises of two layers. One is your Bohr, which is the block producer. So in any any blockchain, there are two things. So there is one block producer layer, and uh, there is a validation, the final checkpointing layer, which is called Hemdal, which is the Hemdal layer, which has the finality, the consensus finality, that allows the validators that are on Ethereum. So our validators, so we have about 100 validators. So any like coming, I mean, taking a step back before getting into the architecture. So there are three things that any blockchain has to design with respect to. One is the decentralization, one is the security, and one is the speed, like the UX side of things. So the decentralization. So of course, any chain, other than Bitcoin, that wants to compromise on decentralization will get more decentralization and security will get more UX, in a sense that it will be more centralized, but it will be quicker. Like you will require less what do I get? Like less finality. Sorry, less commitments on every transaction. So there will be less confirmations. There will be less. There will be less confirmations, so less time taken for each validator to get into a consensus. Now using that, like we designed our decentralization, so we don't have as many validators. We have 100 validators. It was 80 a couple of months back. Now it's 100. We are increasing it more compared to Ethereum, I think, which has like 5,000 validators. So we have like 100 validators on that lie on Ethereum. The contracts of all the validators lie on Ethereum. Staking, so it's the POS network, so it has staked about 1.52 billion dollars of MATIC. It depends on the price, but roughly it's 1.6, 1.7 billion dollars at current price of MATIC tokens. So that secures all the economic activity that happens on Polygon. So if you look at like a rough number, so Ethereum, the beacon chain, the POS chain, which will happen, will be securing about $800 billion of assets with $20 billion of $20 billion of ETH 2.0, like ETH 2.0 staked. So by that, like Polygon, by the staking mechanism, it's pretty secure. So all the slashing, checkpointing, validation logic stays on Ethereum, which has our Hemdal layer, and the Hemdal layer, like I said, is a Tendermint consensus mechanism, which is it's a Tendermint consensus. Whereas the Bohr means the block producer layer. So the validators produce blocks every 2 seconds, and these 2 seconds, so there every 256 blocks we put a tree, we put a Merkle tree of these blocks onto the we make a tree, we take the root and put it on the Hemdal, we checkpoint it to Hemdal, which is what the finality, which allows finality according to the same way that Ethereum works, the longest chain finality. That's how, like, so we the producer layer creates these different blocks, whereas since they're quicker blocks, like there's 2 second blocks compared to 13 or 15 second on Ethereum. So there is a trade-off with block time versus centralization, which allows better UX, like your transaction. If as a user, if you put a transaction, it's very likely your transaction will get into the mempool and then processed quicker as compared to Ethereum. So there's this trade-off that we have taken for better UX and the better thing, but we are also in the process of changing a lot of architecture, like the V3 of our Hemdal and Bohr, the POS chain will be will be much towards decentralization and adding newer validators and all these sort of things.
That was a terrific answer, man. And I love all the detail you're giving us. Truly, really cool stuff. And, while we're talking about this, just getting a little bit more into DeFi, just wanted to hear your take on the concept of governance as a whole. More specifically, I know a lot of people think, there's kind of conflicting takes on what the importance of governance is within the DeFi space, just because there are some people that kind of lean a little bit more cynical in terms of, depending on the project or the protocol, some people may feel that the governance tokens can be a cash grab, but at the same time, a lot of people, in fact, I think most people, feel that governance is an integral part of what is a truly decentralized financial system. And that's kind of, it's very important in terms of what makes DeFi DeFi, and would just love to hear your take on that. And if you want to give us any information on governance in terms of Polygon's perspective on that concept as well, that would be awesome. I think our listeners would really love to hear that.
Yes, no, that's a good point. I think definitely. I mean, in recent times, certain projects have faced some issues with the governance thing, but I'm totally of the school that governance tokens are important because they keep. I mean, the distribution can be skewed towards your investors or whatnot. Like if you're a VC backed thing, that can be skewed. That's a different thing. But governance is important. Governance is important in a sense that it allows the users to have say in the protocol, have skin in the game, have different sort of voting power to change parameters, to change different sort of things. How you distribute it, I think that is tricky. Yes, so certain projects have, like the VCs and certain I mean, delegation is a different thing, but certain VCs have a lot of power over certain uh, certain parameters and all of that. The proposals that come up, but it's also on like I don't have like much comment on that, but it is also fair to see that those are the people who want to who have skin in the game, in a sense that they are also very highly invested in that protocol. But yeah, but coming back to Polygon, so we like MATIC token currently does not have a governance part. Like there's no governance utility, to be honest, yet. But we are actively like very actively working on building a governance model that will help especially with the multi-sig. So we have this bridge multi-sig which we are actively moving it into a most likely a compound time lock based governance. So yeah, so right now, like I said, we don't have governance. So it's currently done by the Matic Polygon Foundation with of course we have many community calls and stuff. But in DeFi, but specifically towards DeFi, I think definitely I think governance should be there. It's just about distribution, that like you can have a fair distribution like Wi-Fi did, or you can have a different thing like your what uni or compound or these tokens have. So it's different, like it's upon DeFi, but specifically towards Polygon, so we are not particularly DeFi, like we are a platform thing. So Matic will definitely very soon have governance utility that people can use for.
That's awesome. And such a terrific perspective you have on that. And frankly, I actually really agree with a lot of what you said, and I'm sure a lot of our listeners do as well. Now, here's the thing. I know you're the head of DeFi over at Polygon, but obviously it's not a DeFi only podcast, as you know by now. And I know you guys have recently announced Polygon Gaming Studios, and it seems like you're really going to be working towards kind of creating an NFT ecosystem and using blockchain tech to improve the gaming experience, really. So, can you tell us a little bit more about that?
Sure. So Polygon Gaming Studios is definitely one big thing that the NFT and gaming team is doing, because we like, even personally, I feel that gaming will be very very big in the near future, uh, especially on-chain gaming, bringing Web 2 to Web 3. So Polygon, with its low gas fees, and specifically with the SDK and all these utilities that we have built. So Polygon Gaming Studios, the objective with Polygon Gaming Studios is to bring Web 2 gamers and gaming studios into Web 3. uh, it might not be clear from the beginning, because we want to keep it, we want to, like, look, think of it this way, like, so if you look at a game, correct, so if you look at a game, uh, people play that game because it's interesting. People don't care whether it is on Unity, whether it is Unreal, whether it is, like, no one cares. I mean, other than the engineers, people don't care. Like, gamers just want low latency. They want to make
Yeah.
money, if it is a
Yeah.
play to earn sort of thing, or if it is collectibles like World of Warcraft or something.
Hmm.
So they want the dopamine hit and certain things, like status with the World of Warcraft,
Yeah.
League of Legends stuff that you get. They can put on eBay and that sort of thing. So with that, NFTs will be that collectible thing, which will actually have like a dollar value, and which will be unique to every game, which can be traded on a certain marketplace like OpenSea or whatever. Uh, Having said that, I think Polygon Gaming Studios will play a major role in bringing a lot of these things on into the Polygon. It's a separate entity. It's a separate entity. It's not. It will not be run by the Polygon team per se. It will be a separate entity. But yeah, the objective will be to align this together. Yeah.
Awesome. And this brings us to Saffron. After all, it is a Saffron Academy podcast. Just kind of generally, what was the beginning of that relationship like? How did it start? And just tell me a little bit about how our protocols are working together.
Sure. So I'll tell you, like, our goal with our goal with these DeFi for all initiative was to get the building blocks of DeFi onto Polygon, because to bootstrap any DeFi system, there has to be certain projects. There has to be certain primitives, basically DeFi Legos, if I may call. There has to be a big lending protocol. There has to be big DEX. There has to be a big a stablecoin issuer. Certain these things are very very important. Otherwise, it does not make sense. It just does not make sense. Similarly, there are new primitives that are being built, in the tranches, in tranches, in what do you call, in yeah, mainly tranching, risk tokenization, these things. Which is very important, which is very important. So that's why we were looking into Saffron, mainly because Saffron did a pretty good job at tokenizing risk, tokenizing, like, building tranches, all of these things, even with dexes and also with lending protocols. So we now have two lending protocols. We have Cream, we have we have, of course, Aave. We will also see soon Compound. It's not public, but yeah, like, we're working very closely with the Compound team. So that's also being worked upon. Uh, so yeah, like, I think Saffron, when we started speaking with Sai, it was very important, to get that right relationship with the team, and just help them in any, like, technical stuff or technical integration, because layer twos can be a bit tricky for, like, L1 builders, how to process, how to move assets, how to communicate between L1 and L2, and all those sort of things. So yeah, that was interesting conversations that we had, and I think it's pretty much towards the launch now. So I'm personally very looking forward to this. We also have Rari Capital here. I mean, it's not Rari, so it's like a official franchisee of Rari protocol. So because Saffron uses that on L1, so you guys also have another yield source on Polygon. So that will also be interesting to watch.
Yeah, definitely. Awesome. I love that answer. So, as you stated before, I know Polygon isn't, a DeFi protocol, but at the same time, you are the head of DeFi over there. So, just kind of a general question in terms of the outlook of what you think the space is going to look like going forward, as things start to scale, as we get Ethereum V2. What do you think that the DeFi space is going to look like a few years into the future as we start to have some of those big things roll out that people are looking forward to? For example, I know a lot of people have said institutions are here or institutions are coming and making investments and making moves into the DeFi space. But obviously, there's still a lot of room for growth there, and there's still a lot of institutions that have, kind of one foot in, one foot out. And I'm just wondering, for you personally, what do you think that looks like a little bit down the road? Do you think we're going to see an explosion? Do you think we're going to see kind of a trickle in effect of more institutional capital? Do you think that all these, kind of scaling issues that we're solving, are those going to create kind of a boom? Tell me what your outlook is.
Sure. So I personally think projects like Compound Treasury and Aave Pro, they have the power and the potential uh, to bring a huge amount of capital into DeFi, because they are the blue chip of the blue chips, and with certain yield, with KYC, and like even for us like DeFi people, native DeFi people, for us 4% is not big, but for corporates and treasuries 4% is very high on their treasury yield, on the corporate treasuries, which compound treasury is trying to bring in, then Coinbase is trying to bring in. Uh, so definitely, this would be very interesting. Institution capital can finally, we might see some of these, some of not big. I don't think project. Sorry, big companies will allocate funds at least now, because it's still very like wild west right now. But this at least in the stable coin side of things, I definitely see very interesting things happening in terms of compound cash and compound treasury, sorry, and Aave Pro, mainly these two. In terms of general architecture, general overview of DeFi, I personally think like derivatives will be very important. We haven't seen the boom of on-chain derivatives. I even wrote an article some time back around this, but we haven't seen the boom of derivatives really soon. Like tranches, you guys have built, then Band Bridge is there, and certain things are there. But I personally think uh, there'll be still time for derivatives, because it could be possible that with layer twos and scaling solutions, like we have the most number of derivatives projects on across any chain. Like even we have more than Ethereum, and the reason I think is I think when we ask these builders, the founders of these projects, the developers, they tell us that people are like in DeFi, the investors are not sophisticated enough to put a lot of capital on Ethereum L1. I mean, they just don't understand derivatives as well. People understand yield farming. People understand yield farming. 1,000% APY day one. That's it. Uh, but derivatives like hedging properly, hedging and yeah, these certain things I think will be possible with layer twos, when these yield farming things saturate. I feel then, truly derivatives can pick up and hedging will happen. And I think Yearn and yield aggregators can plug in certain stuff. So like if you want to hold ETH, then there can be a strategy with like I'm just thinking, like this was something I was thinking about yesterday. In fact, like you can put $100 of, I mean, let's say you have 10 ETH and you put it in Yearn Volt. There is a certain Volt that automatically hedges your position as well. Like so, you go long on ETH via one strategy in that Volt, but you also have another strategy that gets a put option on your ETH. So if there's a downside, you benefit from that, and if of course you're long on ETH, but you hedge it with a certain protocol, let's say Pods or Hedgic or Opine or whatever. So something like that could be very interesting to see with yeah, like an investment bank automatically allocating positions. So yeah, that's just what I feel. That's something very cool that we might see.
Awesome. Very cool. Another question, just kind of somewhat in that same vein, but since we just focused a little bit more on institutional capital, I'm wondering about retail, just because, I think that obviously everyone's waiting for that institutional capital to continue to come in. But at the same time, historically, we've seen, retail investors are really what moves this market, at least in the recent past. And so, what I'm wondering about is I saw this on some YouTube video or some podcast I was listening to, and they were talking about how, particularly in this most recent kind of, I wouldn't call it necessarily a crash, but pullback, correction, whatever you want to label it as, there were a lot of liquidations and there were a lot of people getting burned. And that's because of the level of, leverage that the space has kind of developed into being able to offer. And so, do you think that that's a good thing, a bad thing? Do you think that that should be regulated? Because, some of the takes I was seeing were kind of geared towards, hey, maybe, 100 to 1 leverage, not the best thing in the world, because what we're doing is we're kind of burning people. They're losing their capital. They're going back to fiat land. And not only are they no longer partaking in crypto, DeFi, whatever it may be that they were investing in, not only are they not partaking in that, but now they've kind of, since they've been burned, they have a negative view on it. They have a bad taste in their mouth. They could be telling other people, hey, don't invest in this stuff. I got wrecked, whatever it is. Do you think that that's kind of a dangerous direction for us to be moving in? Or do you think that that's kind of a natural development of having a free market? The fact that there's a demand for leverage like that, then it's always going to be provided.
No, that makes sense. No, I 100% agree that 100x and 125x leverages is not sustainable. And actually, we saw. I'm not sure if you saw, but yesterday or day before yesterday, I mean not we, but FTX and Binance capped it at 20x. So all the leverage is only 20x. At least that's what I saw. So 20x leverage is the max. But even with 20x, right? So if 5% goes up and down, you are wrecked. Uh, you're wrecked and you get liquidated. But even that's a good move. But even like if you look at 20x, right? So I don't think like the max level the 90 percentile leverage would be around 5x. So I don't think people. I read it also many places. Even like SBF and CZ, themselves are talking about like so. Most of like even 90 percentile of leverage is around 5 to 6x, even three to 5x. Yeah. So that I agree. Like 100x is not good, and they stopped it. But I think even more than leverage, I would say these dog coins that came up that got retail in very quickly, which was, I don't know if it was good or bad. I don't know. In some ways, it was good. You can say that it got people on chain buying via Trust Wallet, via Huobi Wallet, and these things, and people got accustomed to certain infrastructure, which is fine, which is a bull case. But on the bear case, it's like people just want number to go up,
Yeah.
which is kind of like it's not sustainable. We know that. So I don't know, like retail. I mean, you're looking at numbers going down. Retail. Um, I mean, in general, like work volumes on exchanges and certain things going down. So I think like it'll be some time until retail, at least in DeFi, takes notice. To be honest, that's my personal thing.
Yeah, definitely. Definitely. I agree with pretty much everything you said right there. And that's great that they capped it because I do think you're essentially luring people in and kind of preying on that gambling instinct. And, at least for me personally, I can say that it's kind of cliche and kind of a meme, but you have to at least partially be there for the technology, because if you want to gamble, you can just go to a casino.
Yes.
So it is kind of. I can see how a lot of people might be pushed away once they get super wrecked with that, but I can also see why they did it in the first place because you get those ideas of all this money you can make if something just moves a little bit. Yeah, but you don't see that kind of dark side of if it moves the opposite direction. So, last question for you here. I don't want to take up your whole day. Obviously, it is a Saffron Academy podcast, as I've said before, and you work for Polygon, but we don't want to close off our podcast or our opinions to our listeners in terms of other projects that we might be excited about. So, just curious if you have anything on your radar that you're excited about, or maybe any new partnerships or anything like that that you think our users should keep an eye on, or anything you're just excited about in general in the DeFi space going forward.
Yeah, I think derivatives, like I said, I think derivatives will be very important. Swaps like perps and options, both will be very important on chain. If we have to, if this is our belief that DeFi will be the disruptor for financial, for TradFi, traditional finance. I think derivatives. I mean, if you look at the traditional markets, the biggest instruments are derivatives. So any project that's working in that direction, I'm personally like looking into that, not just for investment or anything, but just for learning how things can be done, the models on chain, how they can be built. So I think derivatives will be very important in the future, and fixed yield, like some of the things that you guys have been doing, tranching with senior tranche, junior tranche. Those things are what traditional finance builds on. So that is also very interesting, I think. But other than that, like I think, other than that, I don't think like yield farming and all that. Like that's fine. It's up to a certain extent. But I think algorithmic stable coins are still, like this. My people will say that it gets off peg and all of that, but it is a very difficult problem to solve. Yes, it's a genuinely difficult problem to solve. Like when DAI started off, it was genuinely difficult. Uh, but I think stable coins will be very important in the near future, to bring in at least the traditional finance and to decentralize certain things. So stable coins, any mechanism around that. I mean, it's very difficult. We have seen many projects come up and die very soon, but yeah, I think just mechanism wise, I think stable coins are a pretty interesting topic to wrap your head around.
That is terrific. Hamza, thank you so much for coming on the show. I really appreciate it. We love what you're doing over at Polygon and are very excited about our partnership. And go ahead, say whatever you want to part to our listeners.
Yeah, thanks for having me. I really liked it. Of course, like we're looking forward to, looking building together with Saffron, which will be pretty cool. Like it's a new primitive for the DeFi at Polygon. So definitely looking forward. Of course, like all the listeners, if you're building anything, my DMs are open on Twitter. It is KHAMZAH22, my handle. You can find me there. We have like a lot of grant programs happening around, a lot of hackathons that are happening around. So if you're a builder, irrespective of DeFi, NFT, gaming, or whatever, uh, let us know. We'll be happy to help anything along the way. So yeah, thanks for having me again.
Of course, it was our pleasure. And just want to thank all of our listeners for tuning in to another episode of the Saffron Academy Podcast. Again, that was Hamzah Khan, the head of DeFi over at Polygon. I'm Zack over at Saffron, and we will see you guys next time.
Thank you for tuning into this week's episode. If you've enjoyed this podcast, be sure to go and rate us on iTunes and follow us on Twitter at saffronfinance_. We also have communities on Discord and Telegram, and you can find the links to those in the show notes. We'll see you guys next time.
Thank you.